Welcome back to another trade recap. Today is January the 31st. It is officially the end of January. It's been a fantastic first month to start off the year. Hopefully, you guys have been trading well. And I thought, why not do a full breakdown of my Trade Zella statistics for this month? And I also have something else special to share with you guys. I actually posted something on Twitter today. I looked back at my month, the same month that we had in January, but 4 years ago. And I thought, why not show you guys the difference in 4 years, which is actually fascinating. I looked at my old statistics and I can't believe how far I came as a trader. And I think, at least in today's video, I can share with you guys some tips and tricks on what helped me get to the position where I'm at today. And of course, my game plan kind of moving forward, some things that have changed throughout the past few years. And yeah, some tips that I think will help you guys along the way. So first things first, let's hop right into my Trade Zilla statistics. Let me make myself a little bit smaller here. So these are my final statistics for the month of January. As you can see, $140,000, 60% win rate, 4.6 profit factor, 77% day win percentage, average win to loss ratio of 3.1. So this was a fantastic month, outlier month in my opinion. We'll see what shapes up for the rest of course, 2026, but absolutely fantastic statistics so far. Pretty high win percentage for me, 60%. As for my average win to loss ratio as well, 3.1, which is absolutely fantastic. This was primarily based off of one trade that really boosted my statistics, which was that AMD trade that I had that was last week. As for my daily net cumulative P&L, as you can see the graph here, the first day of the month was actually a loser for me. The first day that I traded was a loser. And really after that, had super solid trades week number 2, week number 3, and week number 4. And then of course, last week was a little bit of a tougher week in the markets. We had FOMC, we had a bunch of earnings, so I didn't really trade too well from Monday through Wednesday. Had an absolutely fantastic day here on Thursday. I actually took a pretty big loss the first trade that I took on Thursday, but I ended up bouncing back nicely. And then on Friday, ended off red with my biggest loss of the year, which was a little bit unfortunate, but that's sometimes how trading goes. But ended off the month overall net green with one of my biggest months of my trading career for day trading, and it's been absolutely fantastic. So really what I want to show you guys today, and I think you guys will be very surprised. If you guys didn't see my tweet that I posted on Twitter, I'm actually going to show you guys some of my statistics from about 4 years ago. So as you can see right here, these are some of my trading statistics. We'll kind of briefly go over it. This was 4 years ago in January of 2022, $900 on the month, 42% win rate, profit factor of 1. Day win percentage, 75%, average win to loss ratio of 1.38. As you can see here, the thing that's going to stand out to you guys the most is how many trades that I took. I took about 450 trades. So when I first started trading, this was when I was relatively new to trading options. So I took a lot of trades just because I didn't really have a clear edge and system. I was just still trying to figure it out. So you can see how many trades that I ended up taking, 450 in one single month. I was taking on average about 10 plus trades a day, which is absolutely crazy. As you can see, some days I was taking 33 trades a day. Some of my red days, 26 trades, 21 trades, 65 trades, absolutely crazy. 41 trades, 26 trades, 26 trades. So as you can see right here, these are my Trade Zilla statistics from 4 years ago. And I kind of want to touch up on some of the main things that help me improve as a trader, because ultimately the system and strategy that I trade today is basically the exact same that I traded from 4 years ago, 5 years ago, right? The system and strategy has stayed the same. Some setups I've refined over the years, but ultimately the same system still applies today. The main difference is some of the rules and some of the things I'm about to touch up on today. So these are my statistics. You can take a look at this. As I mentioned, let's kind of talk about what's kind of changed in the past 4 years and how I've been able to not only go from right $900 months to like $10,000 months, and now making over $100,000 in a single month, which is still Absolutely crazy to talk to actually say out loud. So first things first, let's kind of break down the main core difference between 4 years ago and today. So the main thing that we have, as I mentioned, is the strategy and system ultimately has stayed relatively the same. So I still trade the break and retest. I've been looking for primarily the three setups that I always talk about. So these are my favorite setups when it comes to trading, right? The previous day highs, previous day low setup. These are all the setups that you guys see me talk about on a day-to-day basis. Another setup that we look for is, of course, our order block retest. And then we also have our opening range retest as well, which is on the 1, 5, and 15 minute. As for the order blocks, I primarily use the 1 and 5 minutes. So these are the setups that you guys know. This is my bread and butter. I've talked about this plenty of times on this channel and on the main channel. I've talked about it plenty of times in the pre-market preps. So you guys already know how to use the pre-market high, order block, and the opening range retest. So what I want to talk about is not only the setups, since you guys already know the setups, I want to talk about a little bit more about psychology and my overall thought process and how I was able to essentially go from making $900 in a month to now, of course, making over 100,000. And it's focusing primarily right on the process. Let me kind of break this down. So, the main thing when I first started trading was, of course, I already understood the system and strategy, right? I had a very good understanding of technical analysis. And I think most of you guys have a good understanding as well. If you sit at the screens for 3 to 6 months, you'll have a very good understanding of how the charts move, how the markets move. You understand news, what to look for on the higher time frames, what to look for on the lower time frames. So, understanding technicals is, I would say, easier than, of course, right, psychology, right, consistency. So once you have the technicals down, now you're more focused on the psychology, right, consistency, and repeating the same things over and over again. So a very common problem that I had was, number one, as you can go back onto the statistics, I was taking so many trades. You can see 33 trades, 26 trades, 18, 39, 12. I had a habit of, number one, taking way too many trades. I was just basically putting on trades, seeing if they were going to work. If they worked, awesome. If they didn't work, I would just cut the positions. Number one, some things that I changed. And these are some rules that are applicable to most traders that you can use today to improve your trading. Number one is the rule that we always have set, 11 a.m. If you trade after 11 a.m., what's going to happen, right? Is there opportunity after 11 a.m.? Of course there is. But a lot of the times after you trade past 11 a.m., right, you're going to overtrade. There's going to be less volatility in the markets, less opportunity. So it usually forces you to overtrade. So this is one rule that, right, is a rule that we abide by, right? Is there opportunity, right? Is there swing positions that we can put on? Yes. But a general rule of thumb is, right, do not trade past 11 a.m. Another brand new rule that I had was try and focus on trading 1 to 3 trades a day. When you focus on, right, just absolutely quantity of setups, right? You just try and trade whatever it is in the markets. You're trying to capture every single setup in the markets. You're going to get chopped around. You're not going to really have a clear playbook, and you're going to take way too many trades. So now, if you look at my main statistics, I try and focus on 1 to 3 setups a day, right? Quality setups. This is going to help eliminate taking all the bad trades. You're going to focus on quality over quantity. And a lot of times, less is more when it comes to trading. So this is a good rule of thumb. Another rule of thumb that I have when I'm trading is that I always want to make sure I have some sort of playbook, right? Some sort of setup that I'm looking for, specifically in terms of the higher time frame. So developing a playbook is very important, and that only happens when you have experience in the market. So I talked about this a little bit earlier. What we have here is the triple E's. What we need is education, we have execution, and we have experience, right? A lot of you guys, if you have the education, right, what you need to gain is experience, and of course you want to gain some, and of course you want to gain the execution. So once you have the education down, as I mentioned, this takes about 3 to 6 months. You need to gain experience and you need to be able to execute properly. And that comes from, right, repetition, doing the same things over and over again, right? Building a playbook, right? Tracking your statistics, which is very, very important. So these are the main things that you have to understand as a trader, and you can only go through this by yourself, right? You guys watching these videos, of course, they're helpful, but you have to go and do this yourself, because some of the things I'm about to talk about, really, you have to kind of experience yourself. Stuff like, right, blowing accounts, right, going through the ups and downs in trading, experiencing the emotions, right, oversizing, right. You have to go through those mistakes in order to get better as a trader. So those are a couple of tips that I have. Other tips, as you can see, I traded so much. And you can see a lot of the mistakes that I had was I was essentially in this kind of boom and bust cycle. So I was in stage essentially number 2 right here. I was trying to figure out my edge in the markets. I was able to put on some string of winning trades. As you can see, I was green for 2 weeks straight. So I had a general understanding of what I was doing. But you can see, look at my losers in this case. I had some pretty big outlier losers, and I'll give away a lot of profits. You can see I had a nice kind of green streak, and then I'll give away a decent amount of profits within a few days, and then I'll get all the way back down into essentially break even, or I might even turn red. So one thing here is this is what's called essentially the boom and bust cycle, where you can put on a string of winning trades, but ultimately you can maybe trade poorly, revenge trade, and give back all your gains within 1 to 2 days. And the same thing repeats over and over. You have this nice green streak, and then you give all your gains back in 1 to 2 days. This is what's called the boom and bust cycle. This is right where a lot of you guys are at currently, this break even stage, maybe slightly green, slightly red, but it's called the boom and bust. And this cycle is the hardest cycle and the longest cycle to get out of as a trader, because you're essentially refining your edge. You're just basically in discovery, trying to figure out what works best and what doesn't work as a trader. And when you have these boom and bust cycles, right, it can do a lot for your psychology. So for me, I would always put a string on of a lot of winning trades, but ultimately end up losing the money. And I was so confused why this was the case. It was this vicious cycle that kind of repeated itself over and over again. And it was very hard for me to get out of this cycle because, number one, I was trading with way too much money I can afford to lose. So most of the times, right, there's a few tips that can help you guys out. Number one is size down, right? If you're trading right now and you're losing money, right, there's no reason to be losing as much money as you're already losing because you're way sized up. You got to think about this, for example. Let's say you have lost $10,000 in the markets. You've consistently lost month over month and you're kind of bleeding your account. What makes you think that if you keep going at the pace that you're going, you're magically going to make all that money back? And number one, of course, this mindset's wrong because you should never worry about making money, right? A lot of people have that mindset where they want to make money back. Of course, everyone would like to make their money back, but a lot of times what will happen is when you try and force something, right, you're only fixated about the money and you want to make that $10,000 that you lost. You're going to double your size. You're going to take trades without you're going to take trades that are not within your system, and you're ultimately going to be losing more money. So number one thing is to size down. Let's say you're trading with 10 contracts. I promise you right now, if you trade with 5 contracts, you're going to be a lot more profitable because now you're not going to be fixated on the actual dollar amount, and you're going to be more fixated on, right, the process in itself, because you're focused in on what actually matters, which is the charts and not your actual P&L. So focusing on P&L is one thing that is detrimental to a trader, especially at the beginning, right? It makes sense why you look at your P&L. Everyone is ultimately going to look at your P&L. Everyone's going to look at their P&L, but there's one thing from looking at your P&L and actually trading your P&L. If you focus on, right, doing the right things and not focusing on the money, right, of course the money is going to eventually come. And a lot of times what people will do is that they'll be so fixated on their P&L that they're so emotional. All they're doing is just trading their P&L. And that's why a lot of the times, right, a very common mistake is traders will, of course, one of the most common mistakes is they'll sell too early, right? Sell too early. And then they also hold on to losers. And why is this the case? The reason being is because, right, they're fixated on their P&L. As soon as they see green, they take green. As soon as they see red, they want to make their money back. So they're going to hold on to the losers, hoping that it comes back, and then they'll sell for break even. Very, very common. As I mentioned, this stems from looking at your P&L. So that's number one. I know it's easier said than done, but as I mentioned, some things that can help you out is size down and stop looking at your P&L. And as I mentioned, there's one thing from looking at your P&L to trading your P&L. You can look at your P&L, but if you understand that it's directly causing you to make emotional decisions, then try and not look at your P&L or size down to a point where it's not affecting your decisions, right? That's number one. Another scenario is not accepting risk. So as you can see right here, a lot of times what will happen is if I buy here, right, and price would come down, or maybe it's consolidating, I would end up cutting the trade early. But ultimately price would end up moving, in my favor. And I'll be very upset because I end up cutting the trade and it did exactly what I thought it would do, right? So what is one analogy that I was talking about? Let's say, for example, we're trading blackjack, and then we also have trading on the right-hand side. The one core difference about, let's say, when you're putting on risk, when you're trading blackjack, or let's say you're trading, let's say we both have $1,000. We're using $1,000 in trading, $1,000 for blackjack. And let's say, for example, right, we put on a hand in blackjack. When we put on a hand, we're accepting the risk. So we're okay with losing $1,000 because the probabilities aren't in our control. It's the same thing about trading. But let me show you the two main differences. A lot of people, when you play blackjack, you understand that it's probabilities, right? You put $1,000 hand, there's really only a few outcomes, right? You're either going to, let's say you have your hand, you're either going to win or you're going to lose. Technically, you also have break even. But you're expecting majority of the times you're either going to win or you're going to lose when it comes to blackjack. Once you put on the risk, it's out of your control, right? You can't put on risk and then all of a sudden, once the odds show or once the cards play out, then you can take your $1,000 back, right? That's not how it works. Once you put the risk on the table, the game starts, the cards get flipped, right? You cannot do anything. The odds are not in your control, right? You're just basing it off of probabilities. The same thing about trading, but let me show you the main key difference. When you trade, it's the exact same thing. Let's say you put on $1,000 of risk. What we have here is your entry, you have your stops, and you have your targets. Right? Normally, once you put that $1,000 into the markets or however much you're risking, right, it's out of your control. You're willing to risk $1,000. We have our entry, we have our stop, and we have our targets. We should technically, there should be only a couple outcomes. It should be, right, either you win, it hits your targets, or you hit your stop loss, which is a loss. So there should only be really two scenarios when it comes to trading. But what is the issue here? The fact that you can technically put $1,000 in the market. So what the main difference here is that you're in control. So you're in control of following your plan, your entry, stop, and targets. Or if you really want to, where most people go wrong is discretion. Because technically you can put the $1,000 into the market, you can put on risk, but that doesn't mean you're accepting risk. You can easily take the money out. You can easily cut the trade early if you're basing it off of emotions, right? You maybe, for example, you put on $1,000. This is where most traders go wrong because they're not accepting risk. You put on $1,000 in the markets and you're willing to lose $1,000, right? That's how much risk you're putting in. But all of a sudden, the trade starts going down. You're down $200 now. And all of a sudden, in your mind, you're like, dang, I just lost $200. Let me cut my trade here. I'm down $200, whatever. I'm fine with losing $200, right? I don't want to lose the full 1,000. So now all of a sudden you cut your trade for a loss at $200. And you don't even let the trade play out, right? Still maintaining market structure, still holding your plan, still hasn't hit your stop loss yet. But now you're making an irrational decisions based off emotion because you're looking at your P&L. You see that you're down $200. Let me cut. Let me save the rest of the money I have. And you're counting that as a win because you're like, oh, I'm willing to risk 1,000. I lost 200. Let me save the remaining $800 that I could very much well lose if it hits my stop loss. And that's where most people go wrong because they'll keep making these micro decisions, they'll micromanage the positions, and ultimately nothing's changed, right? The actual underlying on the chart, it hasn't hit your stop, hasn't hit your target, and you're making all these small decisions that have nothing to do with the actual chart in itself. And that's why you're scrambling. And then all of a sudden, right, you lose $200, but then your trade, right, ultimately works out. Let's say, for example, we're in a trade. You buy here, you have a stop, and you have targets, which of course are high day and let's say continuation. Price rejects off this level, right? At one point, you're up, let's say, for example, 10%. You buy here, as I mentioned, your stop, you enter, and you have, let's say, targets up here. You're up 10%, but you didn't take any profits. Maybe because you were greedy. Maybe because you want to see some continuation. Or maybe you just didn't have a great entry. And then price comes back down, and now you're down, let's say, you're break even. All of a sudden, especially if you're looking at your P&L, you might start making rational decisions because you're like up 10%. Now you're break even. And now you're like, dang, I was just break even. Let's say now we start going into red. It hasn't hit our stop loss yet, but now we're down 10%. So you're now calculating in your head, you're like, okay, I was just up 10%. Now I'm down 10%. This sucks, right? I could have made money, but I didn't sell. And now it's coming down to my stop loss. It hasn't hit my stop loss yet, but I'm down 10%. Let me just cut my position. So a common occurrence is most traders, what will happen is now price will come down closer to stop loss and then they'll cutting their position, right? They'll cut their position and what happens, right? Trade ends up pushing higher and it does exactly what you thought it was going to do. And now all of a sudden you bought here, sold at the bottom, and now you chase back at the top and then it rejects once again. You sell at the bottom. And then finally, when you do it one more time, let's say you buy in once again, the third time you finally sell and then price ultimately gravitates towards the upside. And now you're kicking yourself because you're like, damn, I should have trusted myself from the beginning, right? And this is very, very common. I know some of you guys are probably watching this video and you're like, damn, this is exactly what I've done. Or maybe you did this last week, right? This is very, very common as a trader, right? I've been through this plenty of times, right? It's very, very normal. So if you're going through this, as I mentioned, I feel like a lot of traders have to go through this. They have to experience it firsthand. Because something like this, right? Maybe if you're brand new and you haven't experienced this yet, you're like, oh, what is he talking about? But I know if you've traded before, you know this is exactly an experience that you've been through. Most traders have been through this. So what is the one thing I kind of want to take away? Just with the things that I just outlined here. Number one, accepting risk. That is key, right? Putting on risk and accepting risk is completely two different things. And the easiest way to accept risk is trade with money you can afford to lose. Most people come into the markets looking to make money, right? Why? Because maybe they want to pay the bills, replace their 9-to-5 income. There's plenty of different reasons why people come into the markets, primarily because they want to make money. But if you're coming into the mindset of making money, it's going to be very difficult because every single time you're constantly going to be thinking about the dollar value, right? How much can I lose or how much can I do or how much can I make with $1,000? Right? Can I pay the bills with this $1,000? So number one, it's going to be very hard if you consistently have that mindset. So try and think of in terms of right process, right? Think in terms of what actually matters on the chart, right? Because I know it's a hard mindset shift and maybe I could talk about it a little bit more in another video, but shifting that mindset is going to be key. And it really starts with accepting risk and trading with however much money you can afford to lose, right? You never want to be in the position where you can trade with more money than you can afford to lose, because that usually leads to making irrational decisions and decisions based off of P&L and not the actual chart in itself. Number two, right? Size down, right? This is very key. If you're risking with too much money you can afford to lose, size down. So I guarantee you, if you trade with, let's say, for example, 10 contracts right now, or maybe you're trading with $1,000 position size, I guarantee you, if you size down and trade with the $500 position size, you're going to trade a lot better and you'll probably end up making more money than you were if you were trading with $1,000, because you're going to be focused on the process and you're actually going to follow your plan. And usually when you follow your plan, you're going to make tons of more money. So that is key, right? There's other things. There's a lot of things to talk about, but taking less trades, that's also key, right? The less you trade, the more you're going to make. I know that kind of sounds counterintuitive because when you first start trading, you want to take as many trades. You think there's so much opportunity in the markets where you want to capture every single opportunity, which is very common because you got to think about when you first start trading, there's so much opportunity. You think if you take more trades, you're going to make more money. But indeed, when there's so much opportunity, you're not going to capture everything, right? When you focus on quality setups, when you focus on what you know and how you know to make money, right? You'll realize that when the less trades you take and you focus on more quality setups, the more money you're going to make. So that's another one. And then there's so many other things to kind of mention, but I think those are kind of the important topics for at least today in specific. Um, but yeah, another one, consistency, right? If you go back onto the charts, right, just all about consistency and showing up every single day and just doing the same things over and over again, especially if they're working, right? If they're not working, figure out what's wrong, right? Track your statistics and improve. It's not going to be, right? You're not going to basically go from making $1,000 to, right, making $10,000 within a month, right? Even if that is the case, right? Usually it took years of experience, right? You have years of experience beforehand to make that jump, and then that's when it's exponential. But when you start out as a trader, if you don't have an edge, and you don't know what you're doing, usually it's just luck. But that luck ends up running out until you build, right, a solid system and foundation. And that's when you can expect, right, consistency and have that compounding effect. So that one, as I mentioned, takes time. As you can see right here, it took me, right, you might see these results here now, right, making $140,000 within 1 month. But it took years of experience, right? I've been trading a lot longer than 5 years. I've been trading close to, I think, almost 7 years now. I think close to 7 years, maybe even a little bit more. It took me that long. And it wasn't always sunshine and rainbows, right? It took me a while to kind of figure it out, refine my system. And you can see I took so many different I took 450 trades, right? I blew numerous accounts. I had so many drawdown periods, right? Ups and downs in tradings. And you still go through that as traders. But you got to think about it, how many ups and down in periods. You might be in this exact period right here where you're in that boom and bust cycle. And I mentioned earlier, this is the hardest period to get out of because you're constantly in a mental battle, right? As traders, you're always in that mental battle as well. But now, the more experience you have, you understand yourself a lot better. So instead of, right, revenge trading, feeling FOMO, right, you're going to have those precautionary measures because ultimately at the end of the day, you're going to have those as traders because we're humans, right? We're going to have emotions, but it's all about how you react to those emotions, which is going to be key. When I first started trading, right, when I took a bunch of losing trades, what was my initial reaction? My initial reaction was to go and revenge trade to make my money back. Now, of course, I still have those emotions. I want to make my money back, but I understand if there's not a setup, I'm not going to take the trade. Before, I would try and force the setup to make the money back. But now I know if there's no setup, there's no trade. Do I want to make my money back? Yes. But do I care if I make my money back the exact day? Or do I care if I make the money back next week or maybe the week after? No, because I understand this is a long-term game, right? Your P&L month over month or even on a day-to-day basis, right, a week-to-week basis, right, is not going to matter in the whole grand scheme of things, right? We're traders. We're in this for the long run. We're not in it for 1 month, hoping we have one great month and the rest of the year is bad, right? We want to do this consistently, month over month, year over year, and that's kind of the main thing that I wanted to touch up on today. I could definitely keep rambling for a very long time. I already had such a great session this morning, but I thought why not make a longer video for you guys. I know it had nothing to do with the charts today, but this is a pretty good video. Let me know if you guys want to see more of these in the comments below. Yeah, hope you guys enjoyed that. If you did, appreciate if you guys drop a like and sub, and I will see you guys all next week. All right, take care, everyone. Have a great rest of the day. Peace.